Okay, folks, so in this video, we are going to violently discuss the top 3 stocks that you need to know about heading into this week. Also, this video is sponsored by our 50% off coupon code Recession50 on ZipTrader U, which expires at midnight tonight. If you want to lock in lifetime access to our step-by-step lessons, private chat, daily morning briefings, as well as our full price target list, I will put a link to that down below. If you are interested, make sure to join before the end of tonight so that you do get that deal. Hope you all had a happy Labor Day, folks. Okay, let's go ahead and get right to work. So the most watched and talked about stock this week will almost certainly be BBBY. Unless you live under a rock, you've probably heard that their CFO, Gustavo Arnell, apparently offed himself by jumping out of a New York City skyscraper. This comes after the company announced massive layoffs and a closing of 150 of its stores. It also came out that he was implicated in an insider trading and fraud scheme just days before the death. A lawsuit that claims that he and Ryan Cohen created a fraudulent scheme to artificially inflate the price of BBBY so that they could sell at higher pumped up prices. Both Cohen and Arnell did indeed end up selling shares before the massive dump, but it is worth mentioning that Arnell's sale of stock was pursuant to a pre-existing 10b-15 plan, which is specifically set up in advance to avoid accusations of insider trading. But nonetheless, the accusation that the parties could have conspired to pump up prices ahead of the planned sell date could still be a possibility, right? On the flip side, though, if you go on BBBY retail trader subreddits, you'll find people saying he was the one standing up to hedge funds and implying that something else behind the scenes could have happened. And obviously, I don't want to speculate on why somebody specifically offed themselves. Let the courts and the investigators do their work. But what I will say is a lot of media outlets are out there suggesting that Gustavo could have manipulated financial reports to make BBBY look more appealing to investors to pump up the price. But I do think that's a little bit far-fetched because people weren't buying because of the fundamentals. They weren't buying because of what was on the earnings reports. They were buying because of the squeeze potential and the hopefulness of riding more momentum. The idea that the documents that BBBY released painted a good picture on the business and made it look like a good arbitrage buy is really something out of a comedy novel. But if you're looking at this from a stock perspective, my first instinct is, oh, this does not bode well. You have the big layoffs, you have this big lawsuit, you have closing of stores, and now you have one of the highest ranking members going and apparently offing himself. You'd expect that to be very, very bad for the stock, right? But I can't help but wonder if all of this extra attention is going to help reinvigorate BBBY and the overall meme trade. It is once again trending on most social media forums, and it's also erased most of its previous hype cycle, which means if it does show proof of concept, there's a lot of room to rebound from $8.63 to $30, right? That's a big amount of upside if you start seeing some proof of concept and some suggestions that it is going to start rallying again. And you go over to the options chain, you have some concentration pushing into strike prices at 9 all the way to really 14.5, which means you still have a primed road to climb if it does shoot up. Quite frankly, from a trading perspective, I would say don't take anything for granted heading into this week. If it dumps, I would avoid it, but if it starts showing proof of concept early on, Tuesday or Wednesday, and starts really pushing upward, I would not be surprised if you get a reinvigorated trade. I think that this momentum wants to come back, and I think it will if it sees enough proof of concept. I think that right now you've had all of this bad news completely derail the stock, but there's a lot of people thinking that you're going to get a rebound rally. Maybe it's not going to be motivated up to a new all-time high, but even if it doubles, you're still like halfway to the all-time high that we just reached a few weeks ago. So I certainly would keep this on your radar early on this week, and I certainly would be watching very, very closely if you do get some proof of concept. But as always, of course, risk management is incredibly important. You do not want to be caught bed, bath, and bag holding. Next, PXMD. So the full context here is we briefed on lovely PXMD on Thursday morning at about $3.60-ish a share because it was showing proof of concept in its price discovery process just a few short days after its IPO, where the price discovery process tends to be the most volatile. And it ended up jumping about 82% from our briefing price, but it had a huge round of dumps and then refilling and then breakouts. And while it has so far been a very, very strong runner, it is now back on the juicy dump cycle. So this week we are looking to see if it can continue to maintain relevance and give us another breakout. Crucial levels of support to hold are 450 and 4. If it can hold and bounce off those, especially the higher one at 450, then the likelihood of a breakout past 657, the previous cycle high, is much higher. Now, the reason that this is even relevant right now is because we are seeing new IPO after new IPO. come into the scene, emerge onto the scene, and all of a sudden hit the ground running, pump up massively in the first session or the second session, and then all of a sudden get bludgeoned. And from the point in time where it finds a bottom after the original bludgeon, then you start seeing these massive price discovery moves to the upside. Sometimes to an extent where you're seeing the stock rally 50, 70, 80, even 100+% in a single day or at least 2 or 3 days, which are indeed incredibly fertile grounds for traders. One of the unfortunate trends that I see in the retail space is this insistence that every single stock that you see that's running is a buy and hodl play. If you don't buy and hodl, you are a sick loser, disgusting, and a freak. If you even say that dirty T-word trade, they look at you like you're some kind of monster. Call it what you will, but there is nothing wrong with number 1, protecting yourself, and number 2, locking in some damn profits when you get them. The stock market is an individual game, and personal responsibility is incredibly important with each and every position you take. When it comes down to 99% of stocks that run huge, well, they're usually garbage, and even if they're not garbage, they're running on something that is garbage and isn't going to last. So why not take what you can get, exploit it, and then move on to the next thing? Okay, third on the list today is GME, Mr. GameStop. This stock has been getting violently bludgeoned with the rest of the meme revenge trade and really the rest of the market since the middle of August. But the reason GME is relevant this week is because they are reporting earnings after close on Wednesday, the day of wins. And if you look at the lovely past, the period of time directly before earnings and directly after tends to be a period of great volatility, like you saw here and here, but this trend dates back through 2021 as well. Historically, earnings reports usually coincide with a move of about 10 to 20%. I expect this time to be no different. And as you know, I like to consult the options chain, and GME options are showing a strong concentration at specifically the $30 strike price, but also upwards into 32, 34, and 35. My expectation is that you have a strong likelihood of a push into the 30s at some points this week if the underlying market supports that. If you get a bigger run, expect other meme revenge and other short squeeze stocks to do some sympathy rallies. We love sympathy rallies. And lastly, unofficial number 4, the TQQQ and SQQQ pair. So it is my view that the main concept that the market is trading on right now is Fed speak. Earnings season has effectively winded down, major economic reports have winded down, and the next FOMC meeting is not until the 20th, which is another 15 or so days away. So right now, the main thing driving markets up or down is really the trajectory that the Fed is portraying with their speech. And we were talking just last week about how the Fed, and specifically Kashkari, said he was disappointed in the bear market rally and felt that markets didn't understand what the Fed was actually going to have to do. And rhetoric like that is exactly what caused the market downtrend that we saw since the middle of August. And as the Fed continues on the course that they are portraying, you'd expect floors to continue to fall across the broader market. And like we have been talking about here on the channel for quite some time now, I do not trust any bear market rally as long as inflation has not meaningfully come down, and even more so as long as the Fed is not acknowledging that inflation has meaningfully come down. And we are nowhere near that, which means the Fed is going to keep bludgeoning each attempt at rebounding. So with that in mind, I'm looking at something like a TQQQ and an SQQQ, and I am operating under the assumption that the overall trend in SQQQ, which shorts the NASDAQ 100, is going to be bullish, and the overall trend that leverages the NASDAQ is going to be bearish, which means that on days where excessive volatility comes into the picture, you're going to see more outsized runs on SQQQ than on TQQQ. But when Madam SQQQ gets overbought, you'll see a push back towards TQQQ, right? So if you are somebody that likes to trade on market-wide ETFs and kind of simplify the overall process, well, I would say that TQQQ and SQQQ will show some really insane opportunities in the upcoming weeks and probably months. September tends to be a fairly bad time for the stock market in any year, but I would expect, especially this year, especially because we have just come off of a big bear market rally. So my thought process, keep those cues right at the top of your toolbox. Anyways, that caps off today's video. Make sure to hit that ravishing like button and also subscribe. This is the last period of time where you will get 50% off our ZipTrader U, which is with coupon code recession50. That expires tonight at midnight. Link down below. Make sure to check it out before the end of the night. And if you are looking to get up to 13 free stocks valued all the way up to $2,000 with Moomoo, make sure to hit our link down below. Have a good one, folks, and I will see you in the next video.